my goodness. Look at this chart. The SPY is dropping. The sky is falling. Is this the bear market? This chart looks so bearish. It's under all. Look at these moving averages. It looks terrible. Just kidding, guys. This is a 15-minute chart. Now this here is the daily chart. Notice when we zoom out, it does not look as bad. When you looking at the smaller time frame, it tells a whole nother story. But when you zoom out and you look at the bigger picture, you're gonna see something very nice. You see that today we had a very nice pullback, a very nice healthy pullback, by the way, in the midst of a bull market. All right, you know, the ETF, the indice, or a stock or crypto, whatever it is, can't go up forever. And you look at these green candles. The SPY really did its thing, y'all. It really made a strong move. So this, very healthy. And what better place for this to start when the SPY actually closed? If we look closer, it actually closed almost in our area of liquidity. Now remember what the areas of liquidity are. Market makers, they like to go stop loss hunting, right? So last week on Friday when we had this close right here, and SPY almost touched this resistance and got rejected, what do you think people were thinking? It was a Friday. They was thinking, hey, bearish. We're at resistance. Let's bet to the downside. Let's short this market. And then the very next day, SPY made a strong move. It opened lower than the previous day, tricked the bears, made a strong move upwards, and closed in the 441 range. That's the range of our area of liquidity that I have here. Okay? Area of liquidity is where the potential stop losses are. If market makers just enter the market the way we enter the market, you'll see big green candles like that more often. Boing, boing, boing. Really, probably even bigger. And then the market will have to pay those prices. The market makers or whoever would have to pay those prices. They don't want to pay those prices. Those are terrible prices. They want to enter when they least expect it. So they enter when they can take out our stop losses, the areas of liquidity. That's where I like to enter as well. To do that, you must identify the the support levels. Here are moving averages. And identify the resistance, like here. Areas of values, like the imbalances, okay? These all help us figure out our entry. You guys understand? So looking at this, we see that the market makers faked us out. We had a gap over here that needed to get filled, and did it get filled all right? Came all the way down. They made this pullback when they were in our area of liquidity right here. Made a nice pullback. It's healthy. Filled the gap up. What could possibly happen tomorrow? All right, this market is still looking bullish to me, guys. Technically speaking, it's close. Even if this red day, it closed above all our moving averages. Okay, closed above all our moving averages. It's all stacked. This is a bull market, guys. We should be buying the dips. So if you bought the dip today, look at this long wick. If you bought the dip today, congrats. You're starting to get it, or maybe you've been getting it. But a lot of our fellow retail traders still isn't getting it. You see the market come down to you saw that small time frame, 15-minute time frame. That's the problem. We got a lot of retail traders. They trading with these small time frames, and they think, oh, SPY is dropping. You look at the bigger picture, y'all. Did this look like a bearish chart to you? This look bullish. This is healthy. Hammer candle. I think they could push it up and take out this area right here. They want to this been building this area up. There's a lot of money for them to take out if they want to push it to the downside. Or they can just keep on going. They can trick us out. Bull trap, bear trap, and go up again. That's what they like to do. It's an emotional roller coaster. When you're a trader, you got to be able to deal with that. Okay? So, back to the technicals. We still have some imbalances here. Imbalance here and an imbalance here. And of course our support level right here, this orange area, which also happens to be where the 50-day moving average is. You know where I like to enter? I like to enter just below the moving averages. Because I like to use the moving averages as support level. So if I'm gonna enter based off this 20-day, I'm gonna look to enter just below it. And look where it is, just below it. It's also an area of inbound. This 50-day, if I see it drop below, I'm gonna look to enter around here in this area. So before the market even opens, I'm already identifying where I would like to enter, which levels. Okay? So like I said, if you're gonna short this market, short up here around this area of liquidity, around between the 441 to 443 range. That's what I said to you guys yesterday. And when the market closed at 441 yesterday, within my range, and we had this nice healthy dip, and it got bought up, guys. Bottom line, I'm still bullish on the SPY, but it doesn't mean I'm going to enter up here or anything like that. Okay, this was a good entry, all right, but I did not enter. For the record, I did not enter. I stayed on the sideline. I'm still in cash position. The areas that I'm looking to enter, if SPY even drops that low, is this area of imbalance here, which is just below the 20-day moving average. Or if it gets below the 20-day, I'll look to enter in this area of liquidity here, just below the 50-day. Okay? That's where I'll look to enter. And when would I get bearish? I'll get bearish when we have multiple closes below the 20-day moving average. Okay? So far, we've only had one in the past week. All right? There's nothing about this chart that says bearish. Stay objective, guys. Identify your area where you would like to enter, where you feel comfortable entering, and go long. Okay, I've already told you mine. You don't have to copy me. You come up with your own strategies, but maybe my ideas and research can assist you, because that's what the goal is. Okay, to assist you. All right. So that's SPY. Moving on to QQQ. Look at this beautiful, nice dip right here. Now QQQ, I did enter. All right, I accumulated, picked some up, scaled in. All right, it came down, nice strong move to the downside, and it just got right under. If you look closer, right under our 20-day moving average. Okay, it wasn't a perfect entry for me. I did try to get, when I saw that, I did try to get in. It filled our area of imbalance. Okay, so this was a nice day trade for me. Now there is another support level right here, down here, this white line right here, came all the way started from May 19th. All right, got a lot going on, but as you can see, all these moving averages are stacked. So we are in a bull market. Okay, now that you know that they're all stacked on top, I'll take it out so you can see this clearer. All right, so let's identify where we want to enter if QQQ decides to drop lower. Okay, here's a good area. Here was a good area, 20 days, but this is another good area. We have a strong support here. And this is also an area of imbalance that I would like to see get filled. So I would definitely enter under this support and inside this area imbalance. Okay? Let me bring back the moving average. And if that doesn't hold and it breaks our lower Bollinger Band, I will look to enter here. Of course, you got to cut your losses. It's okay to be wrong, guys. Do not trade with your egos. All right, in life, it's okay to be wrong. In stock trading, crypto trading, whatever, it's okay to be wrong. All right, what's not okay is having big losses. Small losses is fine. Small gains is fine. Big gains is absolutely fine. You know that. Big losses is not. All right, so identify where you would enter and identify where you would exit. Understand? This is where I entered. Let's see what happens tomorrow. If it drops lower, I'll accumulate here, expecting to bounce up. If not, I'll cut my loss and I'll look to re-enter up here. Okay? I find it easier for me to buy the dip. When it's in a bull market, my bias is to the upside, so I'm looking for buying opportunities, which I just identified for you guys. Now, there are some people who can play this both ways. Okay? What do you call them? Scalpers. They know how to scalp. They can be bulls and bears. They're hybrids. Amazing group of people. Okay, I'm still working on it. I'm not that good, so I'm gonna stick to my strength, and it's what's working for me. Okay, you guys don't try to be like other people. Try to be you, the best version of you. Okay, for me, I like buying the dips in the bull market, and I like shorting that resistance. You know, in a bear market. Okay, keep it real simple because I want to do what's the most highest probability for me. Triple Q and SPY, for the most part, 80% of the time, they're moving to the upside. Okay? Not always, but for the most part, especially when it's a bear strong bull trend like this, of course, I'm looking for buying opportunities, not selling opportunities. That's my style. Okay, I like to enter in areas of liquidity. Like the market makers who like to go stop loss hunting, so do I. I enter below the stop, my support area. You understand that concept, guys? All right. Now moving on to triple Q. Excuse me. Now moving on to ARKK. Now I told you guys yesterday that ARKK, when it was here yesterday, it's flagging its base in a bit, but it did have this area of imbalance. And I told you guys that I was waiting for ARKK to dip lower because I wanted to dip lower and fill this imbalance out. And look what happened today. It totally filled the imbalance, right? So where did I look to enter? I looked to enter just below the 50-day moving average. This was not a perfect entry because it dipped even further. But, you know, I held because I'm long on ARKK. I believe in ARKK. 142 price target, guys. I still believe in that. And sure enough, it went up. It got bought up, and it's still within this range. Okay, so I believe it was a good zone to buy. That's what I did. I got in and where I was very comfortable, and we'll see what happens tomorrow. I really much like to see ARKK break this 20-day moving average. It is starting to slope to the downside, but we do have this 50-day sloping to the upside, which is a good sign. All right, so like I said, ARKK just coming out of a bear market. Right, you had this A, B, C move to the downside. Okay, so today I was checking. After the ABC comes another 5 wave to the upside. 1, 2, 3, and this is 4. So we're working on the 5th wave. So today I used some Fibonacci to check some levels. I started here, ended there. Now in a correction for wave 4, it usually retraces down to the 61.8 retracement. Let me move all this. See the 61.8 retracement to right here. So it's possible that even though we had this strong buying pressure here, it's possible that ARKK could drop down to 110, 110.87. And of course, I'm not gonna look to enter at 110.87. I'm looking to enter just below it a little bit. Okay, if it even falls down that low. All right, that's where I'm looking to accumulate more. I'm bullish on it, so why not? I'm not gonna look to sell just yet. Now, if it drops below, you know, $100, below 97, then yeah, I'll start becoming bearish on ARKK again. But as of right now, I'm trusting the price action. I'm not the price. My conviction does not lie in the price. It lies in the price action, guys. And it's looking like we're heading to a new bull market very, very soon. Okay, so I'm still bullish on it. I accumulated more today. We'll see what happens. 142 price target. So there you go, our indices. Let's move on to Bitcoin. Now Bitcoin, yesterday I only talked for Bitcoin for a couple of minutes, but I would like to spend a little bit more time today talking to Bitcoin because it's very important. All right, we got this big move. I told you guys for a while now, for months and weeks, whatever, that Bitcoin is following the Wyckoff method. Now yesterday I told you guys that it's possible that Wyckoff could be in phase B of the accumulation. Now if I find it for you right here, this is the accumulation, Wyckoff's accumulation schematic 1, which I believe so far that we just came off of this dip right here and we got this move just below the AR level. Is that what happened? Yes, AR level's right there. It just happened, which means if it's continuing to follow Wyckoff, we could get this dip, another leg higher, and then we'll start going down to the spring level, possibly the spring or just another last point of supply, LPS. Either way, even if it doesn't go as low, there will be more buying opportunities. Assuming it's correct, I'm correct that we are in phase B. Okay, now I'm also looking at this version. Okay, so I just showed you this version where we're still in phase B. There's also the possibility of this version, which is also the accumulation, but this is more further along, where Bitcoin is actually in phase C, or finishing up in phase C. So it's possible that we are here getting this dip from the last point of supply and we move up. All right, so not like y'all know, it's obvious, yes, I am not a fortune teller. Okay, so it's like a game of chess. There's only so many moves that your opponent can make against you, right? It's only so many moves, and we can't predict what move, but we can react, right? So in this case, the market makers, the stock market, the crypto market itself is our opponent. So we need to see the possibilities of what can happen, okay? So we can get an idea of where we at. All right, so are we in phase C, finishing up phase C, entering phase D, okay? So it's looking at it, it didn't really quite match ST and phase B. This didn't go all the way up to AR level, right? But like I said before, it's not gonna match Wickoff 100%. Wickoff is just to give us a general idea of direction or possibilities. All right, so it's not gonna be 100%. Then we came down here for a possible spring. All right, now I didn't get lower than ST in phase B, like it said it would here, but keep in mind that this is a long wick. This was a body, so that means it was more volume that came down. So it could be a spring. I didn't see a test. Okay, so we need to get a pullback to see if it's last point of supply. All right, now this is where I want you to guys. This is where I want you guys to watch out for. If Bitcoin can break 41.3K, if it breaks above that, closes above that for more than 2 days, then this is the version of Wickoff that we should be following. That means we are here. And if we are here in phase D, that means Bitcoin, any dip that you get from Bitcoin is buyable. We are back in a buy the dip market, aka bull market. Okay? That's if Bitcoin breaks 41.3K and close it. Watch for that scenario. Now, if Bitcoin fails to break 41.3, okay, no, it doesn't count if it goes up a little bit and then come back down. I'm not counting that. It has to close above 41.3K. More than 1 day in a row. You guys listening? It has to fit that criteria. If it does not, and it fails to do that, that's a sign that Bitcoin will start heading back down, and that we are actually here, because it says we should fail, we shouldn't break the new high, and we are actually in the phase B, and this is the one that we should be following. Okay, keep in mind we have a lot of areas of imbalances here. Imbalances get filled, guys. But yes, it does. If you look here, look, it had area imbalance, it got filled. Look, got filled. All right, there was an area imbalance right here. We checked the 4 hour. You see that? At the area of imbalance, it filled. Now we have another area of imbalance, it filled. Imbalances get filled. And right now we have a lot of imbalances on the downside. Okay? So I am leaning more towards that Bitcoin is actually in phase B. I'm leaning more towards that we are in this area. But if we do break 41.3K, guys, we are in a full bull market. Buy the dip. Few months to a year from now, Bitcoin will be much higher than it is. But if it doesn't, wait for your buying opportunity at the spring, okay? Around the 30K to 27K level, maybe 26K. That's where I'll be looking to accumulate. Okay, guys? All right, so that's today's technical analysis. Thank you if you guys watched through this. I really appreciate this. If there's any stock, if you guys like my style of technical analysis, and if there's any stocks that you guys want me to take a look at, please comment down low. Let me know, and I'll definitely cover it for you in the next video. Other than that, thank you guys. I hope this video helped keep you objective, help keep you calm, continue to beat this market, and I'll see you soon.